and she's going to help us so much on building our capital base, because if you only master what she's going to teach us, you'll see your account growing every day. And without wasting any time, ladies and gentlemen, allow me to welcome a great leader. She's already a V2 on how to V3. She has helped very many people. She's a leader of a very big and successful team that is trading crypto. Ladies and gentlemen, let us put our hands together as we welcome Madam Harriet Nanono, who is going to help us understand what the market structure is. Madam Harriet, you're welcome. We are happy to have you training us tonight.
Okay, thank you, Dr. Fred. Good morning, good afternoon, good evening, everyone. Hoping I am loud and clear.
Yes, you are loud and clear.
I welcome everyone to this Zoom call, and today we are going to learn something small, but if we take it into consideration and then we practice, we are going to become super. We are going to understand the market structure. Dr. Fred, please make me a host.
Okay.
And make me a host. I welcome everyone who is on this Zoom call. Akelo Sala, Sarah, Alan Wamala, Atugonza Sane. Oh, Sane, I'm so happy to see you. Constance Rona, I see Deo, Derek Mukasa, Edward, Fahad Mtevi, Francis, Hadija, iPhone, Isaac, Joe J, Judith. Oh, Judith from the Middle East, you're welcome. Jassy, Mr. Magara, Mr. Mugisha, John Bosco, Najita Shamim. Oh, the one and the only MRD. Deus, Mr. Daniel, Richard Kaligonza. Oh, you are welcome. I know you are not in Uganda, but you are here. Thank you, Rita, Sam. I see Saf B2H, Tyrone, Zoom user, Jingo Zaire, you are most welcome. I request everyone to mute your microphones. Mute your microphones. Mutebi Fahad, please mute your microphone. Okay. How can I mute Mutebi Fahad? How? Okay.
You are an admin, you just click and say mute everyone.
Okay. Let me do that. Mute upon entry. There?
Yes, somewhere below there, you can say mute everyone.
Dr. Weya, mute all. Final, I've seen it. Can you imagine? Okay. Yes, you are most welcome, everyone. Today's training is going to be short and clear. And I think you have seen my face. Have you? Put a thumbs up if you have seen my face, because I want to hide it. If you have seen it, put a thumbs up in the comment. And then we start. Okay. Someone has seen me. Okay, let's go. First of all, I want to congratulate everyone who is in the business that we are doing. You are doing so great. You have understood where your future lies. You know, they were telling us that the future will never come until you have worked upon it. And us who are on this Zoom call, in fact, we are working on it. We are working on it and we are going to do it. Now, the thing we are going to look at this evening is understanding the market. Understanding the market. Because whatever we are doing it from the market. We are doing it from the market. I'm going to share my screen. Let me share my screen. Okay, you can see my board. Can you see my board, members? We are going to understand. We are going to understand the market structure. The market structure. I think that is too big. That is too big. Please go away. Market structure. That is what we are going to look at today. In the market, when we go there, what we are going to do there, we are going to do the buying and selling. When we go to the market, we are going to do the buying and selling. And the market is structured in just 2 ways. In fact, it is structured in 3 different ways. Let me mute everyone. It is structured in 3 ways, and that's what we are going to look at today. And we are going to look at 1, the uptrend. Number 2, the downtrend. And number 3, that is the ranging market. You will excuse my handwriting. I think I was a doctor, like Dr. Fred, so that's why my handwriting is not good. The market has 2 main structures. That is the uptrend, or the market which is going up, the downtrend, the market which is going down, and the ranging market, which is in between there. That is what we are going to look at this evening. When you understand these structures and you follow them very well, critically well, and you take action and you do what we shall advise you to do, you will never go wrong in the market, because the buyers and sellers are also looking at the structure. The buyers and sellers, they are looking at the uptrend, the downtrend, and the ranging market. And that's what we are going to look at today. As someone who is writing on the screen, please excuse me. Now, let's look at the uptrend. The uptrend, that is the market which is going up and down. That is how the market moves. It moves, goes down, and then it goes up. It moves down, and then it goes up like this. This is what we call the market, the uptrend. And when the uptrend is being formed, it is characterized of 2 things, and we call them, now this one is the lower low. For the uptrend, it makes a higher high. This is a higher high. Why is it a higher high? It is higher than the previous one. Then this one which is down, it is a higher low. This one which is up, it is a higher high. The one which is down is a higher low. Why are we calling them higher highs, and why are we calling them the lower low? It is because higher high, it is higher than the past high. And the higher low, it is higher than the past low. That's why we call them higher highs and higher lows. Why? Because this market, when it is moving, it doesn't go in a straight line. Sweet. No, It doesn't. It goes in a zigzag way. 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 That's why when we are making money, we are making money depending on these marketing structures. Are we there, members? Have we understood the higher highs and the lower lows, and then the higher lows? That is the uptrend. It is moving from down, going up, going up, going up, going up. However much it does these coming downs, we call them retracements. That is the word we are using. We call them retracements. So when we are into this market, this is what we do. This is what we do. When it is down here, we make a buy. Here up, we sell. When it goes down, when it is starting climbing, we buy. When it reaches up, we sell. It goes down, we wait. As it is climbing, we enter the market. When it makes a point, then we sell and we get out. We wait and then it goes. So this is what we do. These bendings that it makes, all these curves that it is making, we call them the retracements. It goes up, we sell. When it comes down, we wait. When it is starting climbing, when it comes down, we buy. When it is climbing, we sell. It comes down, we buy. It goes up, we sell. And that's when we are making the money. I think we have understood the uptrend. If we have understood the uptrend, go in the chart. Go in the chart and put a thumbs up. I'll find it there. Then let's also look at the downtrend. If it moves up and it goes up high above, it will always come down. It goes up a little bit, it comes down. It goes a bit up, it comes down. It goes a bit up, it comes down. It goes a bit up, it comes down. That one is the downtrend. Down. Even in the downtrend, dear members, we also make money. Some people think that when we are in the downtrend that we don't make money. We make the money because even when it is going down, it doesn't just go straight, chewy, and then it goes there. No, it doesn't go straight. It moves up, then it goes down. When it goes down, here, we enter the market, we put a trade. It moves, when it reaches up here, we sell. We wait for it to come down. Why are we waiting it to come down? Because we want to buy at a cheaper price. We want to buy at a cheaper price and then it goes up. When it goes up, it makes that move up here, we sell. And then we wait for it to come down. We get out of the market and then we wait when it is down here. It is very cheap. Then we buy and we go up with it. When we reach here, we sell and then we come down. So members, when we understand the market structures, when we understand the market structure, the uptrend and the downtrend and how it works, then we shall be able to enter our trades at the perfect price, and then we shall be making perfect entries and we shall be making perfect exits and we make the money. I think we have understood that one. And before we get out of that, I want us to know that in the downtrend, while in the uptrend, we said it is making higher highs and higher lows. In the downtrends, this is what it makes. It makes lower high, lower low, lower high, lower low, lower high, lower low. And then let us say this is lower high, then this one is lower low. This one is lower high. This one is lower low. Lower high. This is lower low. Why are we calling them lower highs and then lower lows? In the uptrend, it was higher highs and higher low. Now this time round in the downtrend, it is lower high and lower low. Why? It is because now this level here, where you are seeing, let me highlight here. It is low because we are going down, though it is still high. So it is a lower high. Yet this one here, it is lower, low. It is low and again lower than the lower high. So that's why it is called this one lower high and then lower low. Lower high, lower low. Lower high, lower low. And let me tell you, our trades, all the coins that we are trading, they always respect the market structure. They always respect the market structure. Hoping that we have understood the uptrend and the downtrend, okay? Have we understood the uptrend and the downtrend? Let's look at the sideways or the ranging market. The ranging market moves like this. Ooh. Ooh. It is there. It is almost the same. When you look at it, it moves in between there. It is not going so up. It is not going down. It is not going so up. It is not going down. But again, in between there, we make money out of it. In between there, we make money out of it. Let me show you. For example, when it is here, we enter the market. It moves, we sell here. We get out of the market, we relax. We wait for the market to come down here, we buy at a cheaper price. And then it goes up. When it reaches here, we sell. And then we wait for it to come down. It is doing a retracement. I called it a retracement. We call those ones retracements. When it has been going down and then when it has been going up, and then it makes that coming down a little bit. And then here we buy. Here we buy, we sell. We buy here, we sell here. We buy here down, we sell up here. So in all the market structures, all the three different markets that we are having, we buy and sell and make the money. Why are we doing that? Because every time they come down, the market comes down, all the coins come down in prices. We buy at low prices, and when they go up, we sell and we make we make profits. So that's why we always tell you people, we make daily profits. We make profits on a daily basis. Why? Because we have understood how to read the market, how to see that now this is how to spot that this one is an uptrend. I'm supposed to enter from here and I'm supposed to get out from here. That is a ranging market. We call it a ranging market. Ranging market. Or sometimes you'll find people calling it sideways. Sideways market, or some you can as well find a term that now someone can as well be there saying, now the market is in consolidation. It is consolidating. It is in consolidation. How is the market? How is the market, Isaac? The market is just in consolidation. It means it is not uptrend. It is not a downtrend. I think we have understood that one. I need to move from here and then we go to another thing because we have to look at another thing. And we have only 30 minutes and we get out of this place. Are we following, members? I can see a lot of chats, a lot of comments in the chats, and I'm going to get to them when I come back. Now, another thing that we are going to look at. I want us to see the uptrend.
Some people are waiting for you to allow them in.
But I've been allowing them. Let me allow them again. Where are they? I've been allowing. Where are you people who want to get in? Where are you? a minute, and we allow them in. I'm not seeing them. I think I admitted everyone. I admitted everyone. Now I'm going to share my screen. We are going to go to the trading view. Are you seeing my screen, members?
Yes.
So I want us to go to the trading view, and then we identify the trends that we have been looking at. The market structure, the uptrend, the downtrend. After finishing that, then we shall also look at, finally, we shall look at two other important lines. That is the resistance and support lines. Trading view, you come, where are you? Okay, it is here. It has come finally. Today there is a lot of red. For me, when I see red, I just feel happy. Do you know why? It is because we are going to buy. The prices have gone down. We are going to buy at cheaper prices. And then when they go up, we sell. Did you know that, you people? Did you know that when the prices become red, when you see red in the market, that is where we have the business? Because when it is red, that's when we buy. And then when it gets green, we sell and we make profits. We make profits from 1% to 50% to 100%, and time is going to come when we are making 1,000%. Can you imagine? I just can't wait. I love this business. I love this business so much. Look. I am on my trading view, and I'm looking at the Bitcoin, and we want to identify a trend. I know everyone now understands what candles are, the open, the close, the high and low. Everyone understands that because we did those ones in the lesson 1 and lesson 2. We are going to identify a trend. Now, when you look at my screen, I'm in a 1 day. The time frame is 1 day. If you want to look at other time frames, you click down there. And then maybe you can change and put in 1 hour, and then the chart will show you 1 hour, how in the 1 hour the chart has been moving, how the Bitcoin has been moving. We all know when it is green, we are going up. When it is red, we are coming down. But today, my interest is in 1 day. 1 day. Every candle you are seeing here was formed in 1 day. The day starts from 3 a.m. and it starts 3 a.m. and it ends at 2 a.m. 59 minutes. Then a new day starts. Now, if you are going to identify an uptrend, you are going to where are you? Where is my pen? Where is my pen? You, my pen. Are you seeing my screen, members?
Yes.
Yes, we are.
You are seeing my screen. Okay, that is good.
Yes.
Hey, you BTC, why are you going away? For me, I want you here. BTC, please. The people are waiting. I shall beat you, Njakukuba. Okay. Now we are going to look at the trend. Now, if you are to identify a trend, look at what we have talked about, maybe the higher highs or the higher lows. So that's when you identify those, that's when we can identify a trend. Now I'm going to, when we look at like a point like this one, a point like this one, a point like this one, for you to identify a trend, you must look at like 2-3 points. And then you look at those threads. They are not threads, they are called wicks, but for me, I like calling them threads. Or tails. You know, these candles can always be having tails and yes, tails or threads. And now so do you identify points? You identify points. You identify points, then you draw your line. How do you draw your line? How do you draw your line? Come to your trading view here, down here. Click on the pen. Click on the pen and then go and look for the trend line in your in the drawings that are in your trading view. Get it. That is my trend. That is my trend line, and I want to place it here. Here, let me put it here, and then I take it. Oops, zoom. And then I want also here to go on. You just come here. You choo, choo. No, wait, you go away. Who is disturbing me? Let me draw you again. I said go to your favorites or go to the drawings, get. Connect one line, 1 point, and then another point. You must be having like 2 points. Connect them. That one is done. Then let's put another one. Choose. Then place it here. I'm going to place it here. Here. Go. It has gone away. Don't go away next time. I'll beat you. Hoping that you are following. You know, I like these things. That's why I converse with them for me. I just converse with them because they respect me. Ooh. Have you seen a trend? I have identified my uptrend. I have connected a point. I have connected. Who is disturbing my screen? Friends, you can see I have connected points here, here, and here. So now here I know one day, one time, and then it will touch here because that's where the line is. Then we have also connected this one, this point, and this point to this point. We have identified our trend. It is an uptrend. It is an uptrend. Now, this one can only be broken, and we go to another trend. If, for example, if this one here, if these candles move, if this Bitcoin can move, and then it touches this line, and then it keeps going down below this line, then we shall change the trend from the uptrend, and then we go to a downy trend, because the moment the structure is broken, that's when we go to another trend. I want us to identify another trend. I want us to identify another trend. Hoping people are following. Dr. Fred, am I loud and clear?
Yes, we are following.
Someone who is there, please. Okay, that is good. That is good. I want us to identify a downtrend. I want us to identify a downtrend. Oh, this is a sweet downtrend. This is a sweet one. Let us look at it. Go to your trading view, go to your pen, get the line, the trend line. Put it here. I want to put it here. And then I draw it. Ooh. It has touched 1 point here and 1 point down here. Okay. It has gone away. Why do you go away? Oops. Zoom. Let's draw another one. We want to identify a no, you have gone there wrongly. We are going to connect it here. And then we connect these ones here. That one is a downtrend. We can see at some point the Bitcoin wanted to get out of it to break the structure, but again it was pushed down and then it came down. Like when we look at here, where is my highlighter? Highlighter, where are you? The highlighter, where are you?
The account 1, 2, 3, 4.
Now, always when you look at when a point like this one, the Bitcoin moved from here and it moved so down. It even went through this line and it went so down. But again, it was pushed the next candles. The next candles, it was pushed and then it remained there within the structure, within the downtrend. It tried to go up for some days because we are in a 1 day, time frame. But again, a few days it was pushed down and then it kept on going down, trying to go up a little bit, but going down until it went down and then it hit this way so down. So that is a downtrend. It is that forms lower highs and lower lows. Hoping that we have understood that one. It might not be so perfect the way I have drawn it, but when you are drawing it on your trading view, just connect one or two points where you are seeing that the prices came and then reached there and then it bounced from there. It reached there and then it bounced for as long as it can touch, like 2-3 weeks of certain points. Then you have identified a trend. Then I want also us to identify. I want us to identify a what? A ranging market. A ranging market, it is not going up, it is not going down, it is just there. It is just there. Let me look for a smaller time frame because that's where the ranging market mostly is found. The ranging market is mostly found. 1 hour time frame. Please come. One hour time frame. Where have you gone? Oh, it is so down this way. My God. It went this way. Okay. We are looking, let's look at in the 1 hour time frame. That's when we can find mostly the ranging market. The ranging market. Remember these ones, we drew them when we are in another time frame, so I have to remove them. And then we look at a ranging market or sideways. That one, that's when it is not an uptrend, it is not a downtrend, but it is just there, in between there. In between there. Let's look at it here. Let's look at this place here. Members, can you see the candles right there? We want to see a ranging market. We can see?
Yes.
I'm going to draw a horizontal line. What you do, you just get 2 or 3 points. It is there. Then also we put it down here. That is a ranging market. It is not going so up, it is not so down, it is just there. I want to identify it somewhere else. Somewhere here, somewhere here, somewhere here. For many hours, this market was just here. This market was just here. For many hours, this market was just here. It is not an uptrend, it's not a downtrend, but it is just there, around there. It is not going up, it is not going down, it is there, not deciding. We call it a non-decided market. Can we see a non-decided market, members? A non-decided market is in between there, not until it breaks the lines. When it breaks those structure, and okay, let me first talk about these lines. The lines that we are seeing, the lines that I have drawn, they make what we call, the one which is above, it is always the resistance, and the one which is down, it is what we call the support. So the market respects so much those lines when it is moving. I don't know why they move so fast. They hide themselves. When you look at this line here that I am highlighting, where I'm putting my lighter, and then my spotlight here. Now, when we look at this one above, it is the resistance. It is resisting the prices to go above that line. And many sellers are waiting from the resistance line, the line which is above. The sellers are pushing, they are waiting from there. They are pushing the market to go down. So when the market is moving from down this way, where the support is the line which is down, it is called the support. Here we find there are buyers, many buyers. They are waiting from here. They are waiting for the market to move from up, and then it comes here, and then they buy. When they buy, the market starts moving, and then people make profits all the way through. Up here, the sellers are waiting from there to sell because the prices have gone high. When they start selling, they resist the price, the market to still go up. And then it keeps on coming down, and then it is there. So there is a fight. In other words, we are in the market, we are fighting. Who is fighting? The buyers and the sellers. The buyers don't want the prices to go down. I mean, the buyers want the prices to come down, and then we buy at low prices. And the sellers want the prices to go up, and then they start selling. When they start selling, the prices start coming down, so that we buy. So we buy low and we sell high. We buy low and we sell high. Hoping it is understandable. When you have your time, when you are in your free time, you can as well go. The screen has gone. You can go back to your trading view, and then you start looking at it. You start looking at the different coins. Now here I've been looking at Bitcoin. You can go and look for another, and these days we have the BTCST. The BTCST. Some people are saying, Mama, I'm dying of floating loss with the BTCST. Others are jubilating. That is part of the business. In fact, if these coins they were not going down, we wouldn't be in the business. So we are in the business because they go up and down. When we look at my trading view here, this is the BTCST. Oh my God, this coin can move. This coin can it really move? Look here. Look here, friends. Look here. Let me first remove these ones, the measured things. Look here. Friends, look here. This is a ranging market here. A ranging market, a sweet one. Look at it. Look at it. Look at it. See. Look at it. Look at it. Not until it was broken. The market was ranging, it was not going up, it was not going down until it was broken around here. Let me show you where it was broken from. Where it was broken from, it was broken from here. When it was broken from there, then the prices had to shoot up. The market respects these lines. The upper one, I've called it is the resistance. The down one is the support. And when we are placing our trades, we place a trade at the support and we get out of the market at the resistance, because you don't know whether it is still going up or it is going down. So you put a trade down here and then you get out here. Now it is moving. When we look at it, it is moving. When we are looking at it, it moved and then it broke. It broke through. We have seen where it broke through the line. So it had to shoot up. And then now it has come back. When it came back, it consolidated. It went into consolidation. It went into consolidation. I think we can see. Let me put another line to identify another ranging market here. Another ranging market around here. Around these things, the pen is running. I don't know why it is running. I'll beat it. When we look at here, this is here, this place here. This is a ranging market. It is a ranging market where I have shaded. It is a ranging market. It tried to go up above the resistance, but again, it came back. So all the other times it has been trying to go up, but it failed. It failed until when it went down here. Let me show you, it broke here. It broke this support. And now we can see it consolidating below the support. The one which is above is resistance. The one which is below is support. The one who, and the one when we have another line below, then the one which is up becomes the resistance and the other one down becomes the support. Ladies and gentlemen, I think I have over-talked. I think some people might be having some questions. And allow me stop sharing. You are going to go back to your trading view. Yesterday we learned about how it was introduction to the trading view. You can go back to your trading view and then practice and practice and practice and practice. Let me read from the chat and then I see what people are saying. What the people are saying. We are following. Thank you. Yes, I am following. Thank you. Yes, it's massive lesson today. Thank you. Someone is saying volume. Oh, the volume was not good. Sorry. Thanks very much, dear. Thank you. Enjoying the lesson. That is Derek Mukasa. Thank you. Thanks, Reader Harriet. Great lesson. Someone is clapping. Kindly let other participants in. I tried to let everyone in. Maybe the others who came a bit late. Sorry if I didn't let you in. Share the screen, please. Understood, Teacher Harriet. Point taken. You may use the laser tool where necessary for better pointing of illustration. Thank you. Next time I'll perfect. Crystal clear. Thank you. Ready to learn from you, Madam. No. Derek, thank you. My money Deus, I'm happy to see you. Okay. Kindly, okay. Unless if you have a question, we can have questions 1, 2, and then we call it an evening. If you have a question, please
I
just
have a
unmute
question,
yourself
Melissa.
and ask. Deo, I can see you want to say something.
Ida, can you hear me?
Yes, I can hear you, Deo.
Yes, thank you very much for the lesson. I've picked a lot. Now, I want to understand, if I'm drawing the trend lines, I draw based on which time frame? Do I depend on 1 hour, 4
Okay.
hours, 1 day?
Okay. Thank you so much for that question. If I am drawing the trend lines or the support and resistance, which time frame? It depends on the time frame that you want. But mainly, we always advise, look at the 1-day chart, 4 hours, and 1 hour. Those are very good time frames to give you perfect trade entries. Look at 1 day, look at what the chart is saying in 1 day, then go to 4 hours and then 1 hour. Draw your lines, let them be there. Let them be there. And then every time you come to check on the chart, on the chart of a certain coin, you will find them there. 1 day, 4 hours, and 1 hour. Smaller time frames, there is a lot of noise. There is a lot of noise because when you look at a 15 minutes time frame, that means